It's that time of year again, time for you to start thinking about your taxes. So I'm here with Warren Taryle with Taryle Accounting. He's going to give us probably 3 big tips. Check this out, see if it can help you.
First thing we want to look at is entities. And a lot of you probably noticed that some of your colleagues might be operating as a PLLC.
So I actually do loans for a fair amount of realtors, and I see some have the PLLC set up, some of them don't. What does that do for them tax-wise?
Tax-wise, the LLC itself or the PLLC itself doesn't really do anything. It's making an election to become an S corporation that really can save a lot of people some tax money. Because if you're not an S corporation, then you're having to pay self-employment tax on the profit that you make as a realtor. That self-employment tax is 15.3%, and it's in addition to any income taxes you pay.
So they would say 15.3% across the board?
You don't necessarily save the whole 15.3% being an S corporation because there's some other things we have to do, but you do get to save a good chunk of it.
Is there any drawback to becoming the PLLC/S Corp?
The S corporation is going to have to file a separate tax return, so there's going to be a little bit of cost involved in that. And you really do need to do a payroll too, so there's some cost in that too. If you're going to make a profit between about $35,000 and $40,000 a year, that's after all your expenses. If you're going to make that much a year, that's the break-even point where it's probably worth it to be an S corp.
All right. So tip number 1: if you're going to make $40,000 or more, set up that PLLC, have it become an S corp, and go from there.
Tip number 2: maybe let's not make that $35,000 to $40,000 because we're going to get all the deductions and expenses we can.
Okay, how would we do that?
You're allowed to deduct anything that's ordinary and necessary for your business. Really clear, right? We've really narrowed it down there.
Yeah, not vague at all.
The great thing about it being vague like that is it's up to you to decide what's ordinary and necessary, not the government. Anytime you spend any money at all, stop and ask yourself the question, is what I'm about to spend this money on, is that going to benefit my realtor business? If the answer is yes, you're going to spend the real estate business's money. If the answer is no, well then it's personal and you can't deduct it.
Got it. Are there some examples of some, medium to large size ones that you're talking more specifically about, or is this just a really general concept?
It's a really general concept, but the things we see most often is your car expenses. Home office is a really interesting one.
So big ones: auto, home office. I think a lot of people probably knew those. Are there any other ones?
Meals and entertainment. It's not just taking your client out for coffee when you're writing the closing statement, when you're trying to make an offer or something. Those meals that you're doing and the entertainment events where you're working with colleagues, you're working with people in your industry, all you have to do is discuss business before, during, or after, and that meal counts. Travel's another really big one. You're in the real estate business, right? Pretty much anywhere you could ever hope to travel has real estate. Always just keep thinking in your mind, how can what I'm spending this money on benefit my business?
Got it.
That's the key.
One of the things I see lots of people do, because it ends up on Facebook, they go to these 3-day-long seminars. Tony Robbins is there, all sorts of other people with fancy names and songs are there. Are you saying that could be a business expense?
That could be a business expense. Now, the IRS, first of all, they're not very imaginative, right?
Imagine that.
Sometimes we have to help them understand why it's a business expense. One of the things that doesn't qualify as helping your business is self-improvement, right? Because just in the name itself, it's self-improvement, not business improvement. Whether it's Tony Robbins, any other seminar, anything else that you're doing, I recommend keep the materials that they give you, make an extra copy of it. And if you take notes in those materials, that is great evidence to support you're really trying to build your business. That's gold.
Got it. So, if you're going to these seminars anyway, you should be retaining the information they give you because you pay hard money for it, and you should probably take notes and pay attention. Anything else for us?
Well, there's a third area that I call tax advantaged investing. And not that I'm an investment advisor by any stretch of the imagination, but there are certain things you can invest in that create paper losses, and those paper losses help reduce your taxes. Chief amongst those is real estate, rental real estate. There's depreciation. Depreciation's a non-cash expense that reduces your taxes. If you're a realtor, you can count your time that you spend as a realtor that'll help you qualify to be able to deduct these expenses, where the average person couldn't.
Well, I would say that's good news for everybody.
It is. That's one of my favorite things.
This is Warren Taryle, Taryle Accounting. His information is going to be here on the screen somewhere. He knows what he's doing. If you need absolutely anything, you give me a call, 480-744-6040. Of course, if you have any more questions about this stuff, just give Warren a call. you.